scale frauds. That's why we have selected the topic is frauds in Indian securities market, patterns, pitfalls, and prevention. The Indian market has seen since 92 when the biggest scam came of Harshad Mehta, then in 96, then Ketan Parikh, UTI, Satyam, Sarda, GDR issues, then NSCL, PACL, Ponzi scheme, then penny stock, LTGC, then illiquid stock, then Carby Demat scam, Modex International Security scam, CG Power fraud, and various recently the Jan Street case. It is there. So we have seen these cases and we have seen these types of various cases in the past. But now the technology is taking shape. So we are seeing the AI-based Ponzi schemes, fake online trading platform, and using social media to the greater extent to create new types of fraud. Friends, each major scheme has led to regulatory reforms, the creation of new institutions, and the strengthening of the institutional framework, including the tightening of surveillance mechanisms. Perpetrators driven by integrity and greed never miss chance to exploit the law. Insider trading, fraudulent, unfair trade practice, front running, manipulative, illegal trading activity, falsification of books, and exploitation of regulatory or systematic gaps are just a few of many forms of security fraud that are the Indian security market had witnessed till now. Friends, today's objective of this webinar is to explore the common pattern and typology of securities market fraud, the red flags investor and professional must watch, and for the regulatory mechanism in place to prevent and address these risks. Though real-world case studies and legal insights, participants will gain a deeper understanding of how frauds occurs, the loopholes exploited, and the prevention measure that can safeguard both institutional and retail investors. Friends, today's discussion, we want to focus on common type of frauds in security market, patterns and red flags, regulatory framework and enforcement action, impact of frauds of investor and market integrity, best practices and prevention of risk mitigation, and case studies. Friends, as you are aware, SEBI has done a commendable job in tightening the market framework post every scam. But fraudsters are always reinventing themselves from Harshad Mehta to Telegram pump and dump. The next leap must be tech-enabled SEBI 2.0, where AI, global coordination, whistleblower empowerment, investor awareness coverage. If we can combine enforcement with prevention, we can create market where fraudster thinks twice before even attempting manipulation. And for this, we have invited none other than the Executive Director of SEBI and CGM of SEBI, who are the part of the investigation team, and they are the heading the investigation division. So I want to welcome our chief guest of today's program, Mr. G. Ram Mohan Rao. He is Executive Director of Investigation Division in SEBI at SEBI. He is seasoned regulatory professional over 27 years of experience in financial regulation, investigation, and corporate oversight. He is currently serving as ED of Investigation at SEBI since January 2024, where he leads high-stake inquiries into securities market violation. Over his nearly 17-year career at SEBI, he has held multiple leadership positions, including Regional Director, Eastern Region, General Manager, Deputy General Manager. Prior to that, he worked with the Serious Fraud Investigation Officer as an Assistant Director for 5 years, focusing on corporate fraud and investigation. So his experience in this area is tremendous. He began his career in the banking sector with ING Vyasa Bank Limited, private banking, before transforming into securities market regulation and as a regulator. Mr. Mohan Rao, he is a person who is humble and he has a fire in his belly and always very calm, cool, and taking a bold decision that I have seen. With his heading the investigation division, recently we have seen very high profile cases, and we have seen the cases of technology driven also, and we will hope that continuously his doing new innovation, new things, will definitely see that the fraudster will think twice before taking this step. I welcome you, sir, for this program, and we will definitely get benefited by your expert advice, knowledge, and information related to this. Now, I extend a very hearty welcome to other learned speakers, panelists for today's webinar. Mr. Naveen Sharma, he is Chief General Manager, Investigation Department at SEBI. He has extensive experience in securities market regulation, and with the career spinning multiple roles at SEBI, including an assistant general manager, deputy general manager, and general manager. Naveen has done, and I'm fortunate when Naveen has started his career, he has done training with me in PLB. So he's very dear to me, and I'm so happy to see his progress and the way, the clarity on thoughts and clarity on the securities law. And all clarity comes when you are coming in the investigation division. That time, whatever your knowledge you want to create. So welcome, Naveen. It's my proud privilege also, other than as a SEBI official, you are very close and very part, because when some chela is doing something great, the guru is always happy to see his progress. So thank you, Naveen, for joining this program and organizing this program and suggesting us various things. Then I welcome Ravi Prakash, Associate Partners, Securities and Corporate Litigation, team of corporate professional. Friends, the structure of the program will be like this. I will just give you some few, give presentation on some few slides or relating to this fraud topic. And my focus will be on more that what SEBI should do, something new, and some out-of-box point I want to suggest. That is one point, because we try in all program, whatever we are getting information from the market, we are also giving and suggesting so the regulator can take some new step. And after this, our chief guest will speak. And then after Mr. Mohan, Mr. Naveen Sharma will talk, and he will talk about the type of investigation cases, challenges and issues, expectation from professional and corporate. That is very, very important. That message is should be loud and clear to everybody. And then we have Ravi Prakash, who will give us some practical aspects related to this. And then we will have a question answer. This program we are doing on the online also. So this will be available there. First, before giving my presentation, I just want to inform you the 5th September, the next Friday is gazetted holiday because of Eid. So I congratulate everyone for this. And 12th September, we are having our program on RBI's new co-lending direction 2025 implication for bank, NBFC and financial institution. And that is another very important new development is taking place in RBI. That program we will do. Now, friends, I as a market, because I'm Naveen knows we have worked together in the BLB Limited, it's a stockbroking company, one of the biggest. So we have seen 92 frauds from starting to 92 when Harshad Mehta fraud came to every thing which is happening. So Shivam, can you just start the presentation? So frauds in the Indian securities market, that we should understand that what is this fraud and how this is working. So a stock market is a game of greed and fear. So when people say, what is this? It's a greed and fear. Now, next is the stock market fraud is not in India. Like we think that fraud is only in India, it's a global phenomena. When we are talking about the Harshad Mehta or NSC co-location scam in Indian market, a Wirecard in Germany, Enron in USA, and Luckin Coffee in China show the fraud in shows this it's a borderless and endlessly inventing. So fear, greed works everywhere. Next. So if you see the introduction of fraud in security market, then you will find that frauds in market, Harshan Mehta, Ketan Parekh, Satyam, Sahara, NSC, Carby, Jen, Global, Enron, Medcorp, Wirecard, Luckin Coffee, FTX, crypto, all these things is continuously happening. Next. Next. Now, reason behind fraud, the fraud tangent. Motive, opportunity, and rationalization. These are the three concepts which are running in this. Next. Now, if you see the definition of fraud in dictionary, then any kind of artific means something which is not natural, by which another person is deceived. Hence, all surprises, trick, cunning, dissembling, and other unfair way that is used to cheat anyone is considered as fraud. So, if you are telling something wrong, somebody, you knowing this, that this is not correct, it is also called under the fraud, and people are losing money in this. Next. So, lobham papasya karanam. So, all these greed is a root cause of this wrongdoing. Next. Now, if you see the Companies Act 447 and 448, they talk about fraud, act, omission, and concealment, and fact and abuse of position with intention to deceive, undue gain, injure, interest of company, shareholder, creditor, any other person, whether or not there is a wrongful gain or wrongful loss. Two things very important. Any other person, it is not that only you are targeting these people, any other person. And second is, whatever you are doing, your intention is clear that you want to deceive somebody, whether you gain or not gain, it is your definition will be you will be the party to this. Next, that is FUTP regulation of SEBI. That is also talks about the fraud, act, expression, omission, and concealment committed whether deceitful or not by person himself, another person, here also another person, and agent, while dealing in securities or induce another person or his agent or deal in security, whether is not in wrongful gain and avoidance of loss. So both the definition are common in so many aspects, but this is the way the SEBI has covered everything under the definition, and they can book you on anything which is wrong. So if you see next, governing law of fraud, SEBI FUTP regulation. So it is misrepresentation, false suggestion, active concealment, broking provision, the reckless representation, deceptive behavior, false statement, securities misinformation, all these things covered under this FUTP regulation. Next is the agencies, CBI, SFIO, ED, Intelligence Bureau, SEBI, Economic Offense Wing, Income Tax Department, and then FIU, that is Ministry of Finance, that is there. And today it is fortunate that when I was searching the FIU, then I came to know that my friend Amit Mohan Govil, who is my roommate in Jubilee Hall, he has become the director of this. And so it's a very proud moment for me that my friend is becoming the FIU, is IRS officer of this. Next. So friends, if you say broad category, we have a primary market fraud, which I mentioned. We have a secondary market fraud. Primary market, which is public issue, before public issue, something is happening, during the public issue you are doing, and secondary market, all these things which are taking place. Next. Then come to the type of security, intermediaries fraud, where the brokers and regulator, various intermediaries involved. Trading fraud, where market manipulation, inside trading, circular trading, synchronized trading, all these things are there. And some of the company fraud, illegal, Ponzi scheme, and accounts manipulation, that is there. Now, the interestingly next interest point is that if you see 92, market manipulation started, then insider trading, then circular trading, then unfair buyback, misleading disclosure, IPO scam, account manipulation, accounts fraud, NSE collocation in 2020, investor fraud, off-market fraud 2021, misleading advertisement 2020, snooping 2023, and financial misrepresentation, that is 2024. And then Gen Street, this is 25, which has taken place. So just see the fraud is always there. Only thing is, its name is changing, or this is something. The only thing is inactive timeline. Actual number of fraud in each category are much more. Now, what are the type of fraud classification of fraud is there? Next, one is Shivam. Next, so classification is number one, unintentional negligent fraud. So sometimes you are not disclosing properly, weak governance, uninformed use of algo. Then sometimes what is this? The opportunities are there. So and gray zone is there where intention is not there, but action exploit loopholes and then taking advantage. That is also coming into this, like circular trading, market timing, front running, misuse of IPO, and cross-border structuring loopholes. So something which is not intended, but after some time it has become. Next, then come to the intentional, where pump and dump, Ponzi, where you are aware and you are actively participating in this. Then today, emerging tech-enabled fraud is also taking place. AI-driven pump and dumps, social media, crypto, and greenwash, ESG misrepresenting, because ESG is also taking a shape and giving valuation to the market. Next. Now, what are the common reason of fraud? Next slides. So what are the common reason for frauds and why they are not detected early stage? Diminishing ethical values, poor governance, ineffective internal control, compliance in letter, not in spirit. That is another important aspect. Highly volatile securities market, because so many things are happening in the market that regulator is also not able to manage, and the broker, the stock exchange, and everybody is managing something another that is happening. And in the volatile market, some small thing is always ignored or is missed out. Lack of investor awareness and activism, that is another part, and lack of protection of whistleblower, that is another very important thing. Friends, I will not go into detail because I will leave this presentation to all the participants. The recent securities market fraud, I'll just give you a name and something different. First is order snooping. That is that you are giving buy and sell both side order and creating that market is something very active, but then you are taking out. So then second is front running. Then front running on market manipulation, then off market frauds, then misappropriation of IPO proceedings, misleading corporate announcement, pump and dump scheme, market manipulation and SMS, index manipulation, accounting manipulation, fraudulent loan disbursement, statistics showing enforcement. So this fraudulent loan and disbursement is taking place, and I will show you some cases. Insider trading, you just see it is increasing. Market manipulation, just see is increasing. So this is the trend, and we have taken from SEBI website, because number of company will increase, number of people will increase, number of demat account will increase. So this is bound to happen. Next, fraudulent unfair trade practice, the price manipulation case, there is also up and down. Front running cases is also going up. Order book manipulation is not much, but it is there. Next is the order passed by FU2P. The SEBI is continuously passing orders, and the insider trading order they are also passing. So this is happening in the market. And next is the corporate finance investigation. That is also financial statement fraud is also increasing, and the SEBI is passing an order. Now, first is, what is the psychology of securities market fraudster? The cost benefit calculator. Number one, they think that if I pay 10 crore rupees penalty, but I'll earn 500 crore, they do this. Sometimes players is invisible. Fraudster assume no one is watching, so that's why they do. Sometimes slow boil mean they start with small and then they become big. Like take example, Satyam Raju has said this, that we have started with small fudging and then it has become 7,000 crore rupees. Then halo effect. Sometimes people are big name, Rajat Gupta. They think that if I do, nobody will touch me. Everyone does it. Another point is that if I'm doing what is big, everybody is doing, like Wall Street LIBOR fraud and illiquid stock fraud, that is a part of that everybody is doing, and so many people were involved in this. Then delay immunity, people think they think that the investigation is slow, so when number will come, I will get off or do something different. So next, so friends, these are the psychology. So history tells us the fraudsters are always one step ahead of the regulator. From Harshad Mehta and Dalal Street to Bernie Madoff of Wall Street, and from Wirecard in Frankfurt to FTX in Bahamas, every scam has the same DNA: greed, deception, and regulatory blind spot they want to identify. The challenge before us is not just detecting yesterday's fraud, but anticipating tomorrow's fraud. Next, law blocks road for fraud and greed builds tunnel. That is another thing, a very important famous saying. So you block something, but they will make the tunnels. Like in Jammu Kashmir, the intruders are entering through the tunnels. But some people say, one of the three ancient Greek, they say, rather fail with honor than succeed by fraud. This is the good governance point. Now, my last points, which I want to just because Mr. Raman is there, Naveen Sharma is there, I want to give some few suggestions to SEBI that how the SEBI should do something. Like first is create 3-tier classification of violation: technical, procedural lapses, filing delays, settle quickly while low consent fees. That is one part, because when you give principle of natural justice to each case, it is taking away your time, your efforts. So technical will be on technical way, go to the system, pay the fees, and your matter is settled. No system, nothing is involved. Medium, gray zone, no malice, but investor impacted, graded penalty you can put. Severe, where fraud, investor creating, cheating, market manipulation, fast track enforcement, and criminal action, that something should be there. And the consent mechanism should also be streamlined. So remove heavy discretion, use a scientific formula linked to severity, though it is there, but even then, sometimes some discretion comes. So if it is making this, I have done some mistakes, I will pay penalty and do this. But it is 3 category, then SEBI should take all action. In medium term, amend the SEBI Act, empower SEBI to run fast-track fraud tribunals, link penalties to fraudulent gains plus multiplier like US, because here, though SEBI has done 3 times of the profit, but that effect has to given in the market very clearly, and some proper example and something should come. Develop settlement guideline for recurring violator, that is also there. Introduce Securities Market Court, special bench in either criminal or NCLT exclusive for fraud. Establish gatekeeper liability like merchant banker, auditor, and rating agency face escalating sanction. That is also there, because they are the first step we want to do. This is first, law enforcement. Second is, I want to suggest on the technology and early warning system. Next, Shivam. Next. So that is short term. Use AI ML, which SEBI is doing, for trading pattern detection, spoofing, layering, circular trading, pump and dump. Deploy sentiment analysis tool for YouTube, Telegram, Twitter, X for market moving fake news. Integrate exchange plus depository plus bank fund flow data into one fraud dashboard. That is also very important. Recently, somebody has done the cyber fraud in our office, and we were running this way to that way, and ultimately the quick action has not taken place, money has taken place, and it has divided into thousands of accounts, and you can't track. So if exchange, depository, and bank can be one place, you can stop something and you can make it. Deploy fraud early warning grid like RBI, EWS for banks. real-time red alert for SEBI investigator and broker, investors and broker, and the collaborate with global regulator, SEC, FCS. Though SEBI is doing a lot of work in this, but the market should also know. So there should be a fear factor that if I'm doing this, SEBI can get the data from international regulator also. Partner with cyber intelligence firm to monitor dark web, fake trading application, because so many Telegram channels, so many Instagram channel is giving, YouTube channel is giving still lot of bakwas information on the companies. Long-term investors, AI-powered market integrity center, predictive analysis, blockchain-based transaction tracking, deep fake detection of financial misinformation, launching RegTech sandbox, inviting a startup to build fraud detection tool. That is another suggestion, because new innovative things are the need of the hour. Next, the third is infrastructure and case management. Categorize pending cases into technical, medium, and severe buckets. So SEBI should focus on severe bucket type. Fast track disposal of technical violation with consent. Build central fraud database, pattern entities, repeat offenders. Medium term, set up fraud task force within SEBI, multidisciplinary, law, tech, forensic, and psychology. Psychology is, I have added this. This is another aspect to know this. Improve interagency MOU, RBI, SEBI, ED, SFIO, FIU, which SEBI is doing. But what I am suggesting, that automatic data exchange, there should be dashboard, things should be moved this way and that. And the public and the fraudsters should know that if I will do this and doing this, using this, it will reach there. Create securities fraud intelligence unit within SEBI with power to coordinate across regulator. And the most important institutionalization of fraud heat map dashboard, publish quarterly updated highlight high risk sector, and the like RBI financial stability report that is there. The next point is a whistleblower gatekeeper reforms. That is very, very important, sir. And I just want to tell you, you have a very limited staff. Everybody cannot do. You have to make every investor as your officer in such a way that whistleblower policy and gatekeeper reforms is most important. Launch anonymous digital whistleblower portal, blockchain secured without fear of retaliation and knowing identity. Publish clear reward framework like SEC $1 billion payout, and I think they have done 1.2 billion payout in the last few years. Establish SEBI gatekeeper registry, track auditors, bankers, rating agency with poor records. Introduce graded liability for gatekeeper negligence, lead to suspension, blacklisting. Long-term, link block whistleblower payout to proceed from penalties, institutionalizing trust in the system, and then mandate fraud risk certification for board audit committee, SOX style, that we can do something great in this. Some of the suggestion. Next, this is out of box. This is new one, a real-time risk score for every listed company, like a credit rating, but dynamic. Use AI, NPL, and scan financial filing, social media, news, and trading pattern under one scan. Investor can see a fraud probability score before buying if something is happening, though it is complicated, but we can think on this line. Globally, Moody early warning model and SEC AI tool are moving in this way. Next, second is SEBI's blockchain compliance ledger require companies to upload key disclosure, related party transaction, board approvals, fund flow on a tamper-proof blockchain registry. And here I want to give one more suggestion, sir. Today, all informations are going, and if you see them on the stock exchange, then normal information is going inside and is showing in a bigger way, but the most important information is going under the carpet. So we should divide all three parts and separate column, separate box, the information should go. Reduce chances of backdated manipulation, missing disclosure, accounting, and fudging, like Singapore use blockchain in government compliances. Next and last one, out-of-box fraud simulation lab, war gaming fraud like cybersecurity drill. Now, friends, as you are aware, SEBI, Stock Exchange, and broker jointly run fraud simulation exercise like banks run cyber attack drill. Test a fake dump and pump and dump, AI generated fake CEO video or false announcement, and measure how quickly system catch it up and how system is taking shape. So the drill for fire, drill for this, it is just a checking that my system is perfect. It is not when some system will be used when fraud is taking place. Global anomaly is US Homeland Security runs cyber drill. SEBI can do the fraud drill. That is another suggestion which is totally different. At last, this is my and I always promoting this point. You take action against the promoter, but save the company, save the business. And Satyam, ILFS, and Yes Bank, these are the three examples which were before us. And because in all three things we have seen, you have kept out the fraudster, and you have keep company separate, investor separate, customer separate, and then you have given this power to this. So this is the save the business, this formula. We must do this whenever, like take example of recently Gensol case. If we could have done something like this, the company, the drivers, the stock can also be there. So whenever you are finding some fraud, the first action should be there, that how you take action against the promoter, keep them out from the business, keep them out from everything, and take over by any other method, which we have seen in Satyam, ILFS, and Yes Bank. And today, because of this, Satyam and Yes Bank, they are running properly and growing. And this is the total suggestion and point from my side. Thank you very much to all of you. And I will request our chief guest for today's to share his point of view and suggest us the way forward. Over to you, sir.
Yeah. Thank you, Pavanji. Thanks for calling us, because what you would like to convey to the public is how to get safeguarded with the frauds. And good afternoon, participants and speakers for this webinar. And thanks for the corporate professionals for doing such wonderful programs over a period of time. And I think the perseverance, whatever you have kept it over years, that's almost 5 years you have kept it over there, so that everybody can go back, and even if they're missing a program, they can go back and then they can do it, they can review it. The mandate, one of the mandates for SEBI is ensuring market integrity. And that is where my team is actively involved in protecting the market integrity. And this market integrity, whatever the practices which we have been doing for years, almost more than 30 years, the types of the frauds, as you already mentioned about, the types of the frauds are constantly changing, but the forms are changing, but the essence is not changing. The fraud remains as a fraud. So, and especially there's a lot of market dynamics have changed after COVID with respect to online KYC or work from home or having direct market access or surge in online trading and algo trades. These are all people are taking advantage of it. That is for every reforms. Because many times what SEBI comes out with reforms for ease of doing business. When we are doing ease of doing business, then the fraudsters, they find an opportunity in such facilities of ease of using business. So, and this has become more prevalent when emergence of the targeted social media. Why I will say targeted social media is not coming to everyone. it is targeting only a certain sect of the public. That means if I'm an investor, then the messages, Instagram reels will come only to me and not to everyone. So the issue is they know who are the people who can target, and such social medias are going only to the targeted people. So it is, though it is available to the entire investing public, but it is targeting only for certain sector people where they have some amount of greed is already detected by the AI tools, by Google and other AI tools. The second point is, as you also mentioned about the information-related frauds. The most prevalent is in information-related frauds. Rather, SEBI is much more equipped with trade-related frauds. If someone is doing trade-related frauds like circular tradings or trading among themselves or creating higher prices, establishing higher prices over a period of time, then SEBI is, I can say that, reasonably equipped to find out such market practices. But whereas this information-based market frauds has having a different dimensions and changing these dimensions over a period of time. So there are big challenges are there, but many of the times where we are trying to decipher whatever we are able to do it. And the most important thing, what you also, in your first slides, you also mentioned about the greed. Greed is this fundamental source for the market frauds. If there is no greed, I think fraudsters will never come. It is like if there is some sugar is there, then ants will come. So greed is like a sugar. If the greed is not there, then the fraudsters, then that means you are actually stopping the fraudsters to enter into this market. But for an investment, yes, greed is also required. I can say it is a necessary evil in the market. Otherwise, market will not come. It will become a perfect market. For a perfect market, you will be having only buyers or only sellers. So if you want to market to exist, you have two or more different viewpoints about a particular stock or a particular industry or a particular about economy. Somebody will be selling and somebody will be buying. So greed is a necessary evil, what I can say. So when we cannot eliminate greed from the market, then what we can do is we can develop more systems, especially to contain. I can give you one example where SEBI has come out when SEBI was doing investigations with respect to the designated persons trading during window closure period. What SEBI has come out is, it is by, they may not be doing with intention, they will be doing inadvertently. The trades must have executed inadvertently. So what we did, the exchanges has blocked such designated persons PAN numbers to deal during the lock-in period so that we could avoid. But the things are not so simple in containing frauds. I can say that fraudsters, they ensure that the investors to get into either emotional investing rather than intelligent investing. So they play on the mindset of the investors. Because whenever I do an intelligence investing, I always take an ownership, whether if I gain, I will be happy. If I lose, I will not be happy. I say that I don't feel sad because it is my decision. It is an intelligent decision which I have taken. But in case of emotional investing, yes, if somebody loses, then he feels bad. So I don't want anyone in the industry, and no investor should go for emotional investing rather than they should get into the intelligent investing. And where I can say that combating fraud is not just a regulator's job alone. It is a role of SROs, like exchanges, depositories, and it is a role of the intermediaries, market intermediaries, because they are the first level, because the client is coming to a broker. If the broker is vigilant, he will be preventing at least 50%, because a broker may be understanding about his client or his client profile. But if the group of clients are dealing through different set of brokers, it is out of his reach. So at least, but when a broker is doing it, when a client is executing trades with a broker, if the broker is vigilant enough, I think half of the problems will go away. And so what I can say is, it is everybody's job. It is not just one, because we have been given a mandate to protect the interest of the investors. So we are here, and we also punish. We not just punish to the fraudsters, but we also, through by way of investor awareness programs, we also make them empowered to understand how to prevent, how to get trapped for in the net of the fraudsters. What I can say that the first point, what I said is, if the intermediaries, if they exercise their due diligence, or if they exercise a little bit caution about their clients, 50% will go away. And the second part is, every investor should have a simple due diligence. Few questions they should ask whenever, if they get into some social media post, if they see, then they should question themselves that whether it is true or not. That simple due diligence will reduce at least another 50%. So I want every investor to undertake some due diligence. The third point which I would like to mention is, nobody should invest in this market by borrowing money. They should invest only from their savings. Then I can call them as an investor. But if somebody is borrowing money and then keeping in the market, he is actually doing a business. I'm not here to protect the interest of the business person, because in business, I can't get into that one. I can protect the interest of the investors, but not for the businessman. So if somebody is over leveraging and other things, he is taking risk and he is doing business. So he has to exercise more due diligence with respect to his investments. So the responsibility also lies with, what we can do is, where the investor was actually duped, if he is not even aware about it, then yes, SEBI will definitely look into that. And definitely SEBI has taken a lot of actions. As you have seen, we have many of the times, people like in Bollywood, they say, छोटे आदमी को ले पकड़ते हैं, but not the big fish are not get caught into the net. See, it is not that SEBI is not just charging the mule accounts or somewhere. SEBI has also charged. SEBI has proved once again to say that even the international traders are also being punished. What I want to say, see, that is where at least, what is it? It is 600 million USD. The broker has deposited, the market participant has deposited the money. That's the biggest amount where I can say. So we are not here. We are not like the so-called view of the general public. We also caught hold of the big people also. So it is the fraudster, and it is not just fraud, because as you mentioned about fraud, there is one more aspect where we have to mention is, it is not just the fraud. It is also unfair business practices. If somebody is doing unfair business practices, they also get into this ambit of SEBI PFUTP regulations and insider trading regulations. It is mostly PFUTP regulations. And yes, of late, the COVID has given a lot of opportunities to the fraudsters, because they can trade from anywhere from the country. Maybe they can sit outside the country also. They can execute, they can place orders on behalf of either in their accounts or somebody's accounts, what they need is credentials of the person. So this is where we are also facing challenges with respect to identification of the location of the person where he is sitting over there. But I can also say that SEBI and exchanges has enhanced their surveillance mechanism, not only by detecting and containing frauds, but also they are trying to protect the interest of the investors. Okay. With respect to investigation, yes, the investigations they have enhanced their skills, and more hope. I can say that in the next 1 year or so, we will also be in a position to combat AI-based manipulations, which are likely to come up maybe, or it may be already there in the market. So with respect to the details of the investigations, another part where market abuses, Sri Naveen Sharma will speak. But my urge to all participants or to the investors is they have to do more due diligence with respect to whenever there is an information-based manipulations are there in the market, which we cannot avoid. Let me tell you, whether somebody may be having social media or some other media will come tomorrow. So we cannot avoid it. What we can do is we can only prevent it if we are having some element of due diligence when we are investing in the market. So with this, I just take leave from you, and I hope so. In case of anyone has got some doubts or something like that, apart from asking questions with respect to specific cases or something, so which we will not be answering about it. But yes, I can assure you we are doing our best job. Our job is to protect the market integrity. And thank you. Thanks for giving this opportunity.
Thank you very much. Thank you very much, Ramon sir. Your word of wisdom and the message to the market is loud and clear that everybody should not blindly follow. They should do their due diligence. When you are investing any money, you see 10 things, but when you are investing money in the stock market, why you are taking a blind jump? The one question which is relevant to you, sir, in spite of so many stringent evolving litigating framework, legal framework, there is no stoppage of fraud. Can AI be used and it can be protected? Sir, yeah.
I can say, see, it is too difficult to say whether AI will protect it or not, because it is so different. That means there can be counter AI tools. What I can say, and if you know that there's some virus is there, then you can find out what is the relevant medicine for that. Otherwise, if you are countering certain AI tools, then it may not be sufficient enough to handle such situations. I feel it should be like a clinical diagnosis. So it can be only maybe maybe I feel it is not so be so effective at this stage. Maybe in future, yes, it is going to be.
Sir, the whistleblower policy, which is there in other part of the world, because can't we make it more stronger, more effective, and more remunerative?
What you raised, that whistleblower and gatekeeper reforms, yes, I do believe. But what is more important is the whistleblower which was there in the outside India is something different, where they are giving definite informations. Here, what is happening is the whistleblower is just giving a superficial information with what is available in the newspapers or what is available in the net. That is not sufficient. See, there should be a specific how it has happened, because it should be like an evidence. It should immediately act shown as an evidence. A hardcore evidence has to be given. If it is there, yes, I do believe that this will definitely come out, because though this whistleblower policy has come long back, but still why it is not taking up is because the hardcore evidence which they are not giving. It is just a superficial. So that is where we are lacking, because if it is there, if you get about 10 cases or even 5-6 cases of where you have got a hardcore evidence, where I can directly give, that means actually why do you reward this whistleblower is you are reducing the regulator's job. You are reducing the regulator burden to obtain the information, obtain the evidence. So that is where the reward is being given. So, but if it is not so, and the other part is, it is being misused also in some cases where in the corporate wars, they are just alleging something and then something goes on. Some cases will be initiated. They are aware. Some cases is being initiated. So that is where it is being misused. I think possibly if it is genuine whistleblower, I would have say that this would have been at a higher level.
Okay.
So can I say something on this to what Ramon said on this particular point of whistleblower policy?
Yeah, Naveen, yeah.
So just to share one experience, we had received one reference couple of months back on this whistleblower mechanism. And when we started examining that matter, we find that the whistleblower has not been specific in his statements. He has tried to bring in everything under the sun, be it FUTP regulations, be it PIT regulations, be it MPS regulations, be it LODR regulations, and whatnot. So when we started questioning or interacting with the whistleblower, he was not very clear what he's trying to say. He is saying that the entities have done some kind of manipulation, and he was not clear what exactly or what strongly he can conclude that these entities are doing something which is not in line with the regulatory provisions. So that's where the challenge lies. So as Sir rightly said, that people are not coming out with specific information. They're just trying to give some vague kind of piece which we need to examine, and that's not something which regulatory resources needs to be deployed for.
Okay. So I think thank you, Ramon Rao sir, for your word of wisdom. And if time permits, you can continue with us. And I will request now Naveen to say his point of view and the message to the industry, because you are working on the grassroots, ground rule and ground. So you know what are the things you have to see, what are the issues, what people should do mistakes, what are the things which are not intentionally but converted into the wrongdoing. So your message and your experience and your challenges when you do this. Over to you, Naveen.
So thank you, sir. Thank you so much. Seriously, it's an opportunity for me to be here, and I always love to interact and participate in these kind of platforms, because this allows me to interact with my fellow colleagues, the professionals whom I really need to interact. And such platforms always gives me a window to connect with these professionals and share my learnings where things have gone wrong, where we had seen that there were certain lapses or certain non-compliances which could have been taken care of if a small level of or rather I'll say extra due diligence is taken care of. So for example, there is a provision of model code of conduct in insider trading regulations. Now the regulation says that MD or board has to frame the code of conduct, and a compliance officer is required to ensure the compliance of that code of conduct. Now the code of conduct is framed, but whether that is in line with the spirit of regulations or otherwise, that compliance officer has to ensure. And if that compliance officer is not taking care of the various provisions specified in that model code of conduct, the code of conduct is not talking in terms of the regulations. And if the code of conduct is not talking in terms of the regulations, there is a possible violation. There is high probability that multiple violations will occur. Maybe it in terms of plea clearance, maybe in terms of contract rates, maybe in terms of different interpretation. In fact, in one of the cases, I remember there was a company, I won't name the company, but in that particular case, the model code of conduct was there, but that was absolutely disaligned with the provisions stated in the schedule of PIT regulations. And when we started interacting with the entity, the company was, or the people who were responsible for that, but absolutely clueless that what model code of conduct demands for. So that's where I feel that these platforms allow me to talk to people, to interact with them, and to tell them that this is how you should frame your internal documents or your internal code of conduct, so that compliance is at its best. So thank you. To be honest, till date, I was at the other side. I was audience. Today, I'm a speaker. So it's a really honor and privilege for me. Uh, I'll start with one line, that investigation is very exciting, but at the same time, it is very challenging. To complete an investigation case, it takes a lot of effort, consistently, focused approach, lot of man hours, lot of data analysis, lot of usage of technology. So when we take a case, I'll talk about different kinds of cases separately, but a general context, I will set that whenever we get a case, it's a only prima facie input. It's like a small point that something has gone wrong, be it in terms of PIT regulations or PFETP regulations for market misconduct or front running. But that input has to be created into a full-fledged case. And that really requires a lot of analysis, a lot of data points have to go through, a lot of information has to be collected from different entities which are involved in that particular examination. And on that basis only you can take the case to the final stage or to a logical conclusion. Now, in each and every investigation, there is one word which is very important, irrespective of the kind of manipulation you are examining. That is called evidence. So if you have good evidences on record, your case will sail through every stage, be it legal scrutiny, be it media scrutiny, or be it internal scrutiny. You will have minimum challenges if you are not if you are having good strong evidence on record. Now the challenge which lies is that how will you create evidence or how will you gather evidence? So evidence can be in the form of calls between the people. Evidence can be in the form of trading which entities are doing. Evidence can be in the form of for example, somebody is disseminating misleading information in social media, then the what do you call it, WhatsApp chats, or the people who are responsible for uploading misleading videos on YouTube, the connection between those entities who are uploading and the people who are taking advantage of it. The bank statements could be another example of evidence. So these are a few examples which I want to share, that on these basis evidences are collected, and once you get a strong evidence, then you will have a case before you where you can take it to the logical conclusion, be it in terms of adjudication proceedings or 11B proceedings. I was going through your presentation where you were proposing that in case if the violation is not of that grave nature, we should think about leniency as far as enforcement action is concerned. We do consider that principle in mind when we take the final action approval or final action conclusion. If it is not very significant, or if it is not very grave, and the conduct of the entity is not repetitive in nature, we do take lenience views on those cases as well. So as I was talking about the evidence, and when we when we conduct investigation, we generally conduct investigation for three types of violations. One is insider trading. In one of the slides shown by you, you had seen that number of cases insider tradings are rising. So is FUTP, and including FUTP, so is front running. So I'll talk about insider trading first. Insider trading is having three basic principles. The first and foremost is UPSI. So what is UPSI in that particular case? Is it the announcement of results? Is it the announcement of some corporate restructuring? Is it the announcement of some receiving contracts? Is it the announcement of some stake sale or anything similar to it? So once the UPSI is crystallized, there will be possession of information with somebody who will be known as tipper. So the insider, the person who is part of decision making, or maybe extended part of decision making, that person will have information of that particular UPSI. Third entity, either the person who is having information is trading himself, or the person is communicating information to some other person who is tippy, and that person is taking advantage of that information and trading. If the person is himself trading, you don't need another point, which is very important in majority of the cases, that is communication. So if the person himself is trading, I'll give you an example of that. Then in that case, you don't need to prove the communication part. But if the other person is trading on the basis of communication received from him, then you really need to prove the communication, which is very vital and very important. Now, in case of communication, there is possibility then you will have direct communication. And there is a possibility that you may not have direct communication. You have to go by circumstantial evidence. So I will give you an example of a case wherein we had seen that there is a case of direct communication. I won't name the entity per se, but that case was very interesting. The person who was dealing with the preparation of financial results of the company, that person was having a good friend of him. They were meeting each other at number of places. They were having family outings together. They were going for dinners. They were going for social events, etc., etc., etc. In one of the gatherings, the person who was part of the company, he has communicated. He was chatting with his friend, and they were saying that how is the industry going, how is the market going. During conversation, one of the question pops up: how is the company going? And the response of the person in the company was, the company is doing good and we are expecting good results very soon. And that was the trigger point. That was the point which was admitted by the person who has communicated that information to the person who has traded in the market. So this case is a case of direct admission, direct evidence. Another case I would like to share is that one entity was trading in the scripts of the company, in the particular script. Now that entity was not found to be connected initially. There was no linkage. When we examined the bank statement of that entity, we found that when that entity was buying, he was getting funds from a particular account. And when that entity was selling, that entity was paying back to that same account. So that was the point of alert for us. And when we started digging out about that bank statement, who is the owner of that bank account, we came to know that bank account was owned by none other than his cousin brother, who was part of the company whose results or whose stock that cousin brother was trading. So we started confronting those two brothers at the same day. The first one who was trading was very naive. He said, I had not done anything. It's all on behalf of or all on the behest of the one who was part of the company. When we confronted the second one, he says, no, I have not done anything. But when we started examining their WhatsApp chats, everything comes on the table. So my point of putting this point of communication is that communication is very important if you really need to prove a case of insider trading. I remember there was one case which has been examined very recently, wherein there was an announcement about financial results, and the person who was part of the decision making, that person was privy to the financial results, and his relative has traded. Now, the day when that relative has traded, they were together. They were traveling together. But the question which arises is how that relative has communicated to that person who was traded. The question which remains to be discussed is that whether there was a communication required when two people are sitting together and talking together, or it's really important that communication has to be proven. In case of the sum and substance of putting all these points before you is that in case of insider trading case, it's very important to have strong evidence. In case of inadequate or insufficient evidence, it's very difficult to prove the insider trading case. And that's why it's a very difficult proposition that when you deal with an insider trading case, you have to ensure that communication evidence is good enough to take the case to the final stage. So that's something from the insider trading case. One point which I want to share for my fellow professionals is that please ensure that regulatory provisions are being followed in letter and spirit. Don't just go by what you understand. I give one example of that code of conduct non-compliance, where we had continuously insisted with that company secretary or the professional who was responsible for managing that compliance, but that person was having a different view altogether. So finally, we have to take a conscious call that, okay, yes, the company is not in compliance with the provisions of PIT regulations, and accordingly, some action has to be initiated. So my suggestion to all the profile professionals will be that, okay, if you are having doubts, if you are having interpretation issues, if you need clarification, please reach out to people. Please ask your fellow professionals who are already doing these compliances. I'm sure you will get a helping hand. Start interacting with people. If not, if you're not very sure, if you want to have some interpretation about some regulatory provisions, we have this concept of informal guidance, where you can have a clarity on what the particular regulation means, or what sort of understanding is there behind the framing of that particular regulations. So my take for this particular information clarity is that you have to talk to people. You can't interpret your own word and maybe subject to violation of various regulations, be it PIT or be it PFUTP. So PIT, one more interesting observation I have, which is very recent to me, or rather to the department, that what we had observed is that there are companies which are sharing their financial results before UPSI. So we had seen that in few cases, the companies are sharing their UPSI with consulting firms a day or 2 or 3 days before. The objective of sharing that information with UPSI is that they want to prepare the financial results, or rather the presentation for the financial results after the board meeting. Whenever you have an investor call post board meeting, you will require a presentation. So for that presentation purpose, they are sharing the information with those consulting entities. Now, those consulting entities' responsibility is to prepare the presentation and present it in that investor call, which is scheduled after the board meeting. Now, the point of mentioning about this practice in this forum is that what we had seen is that the person to whom the information is shared in the consulting firm, that person was talking with one of the suspects around the time when the suspect was trading in the market. So we were of the view that whether there is a possibility of passing of information from the suspect to the suspect from the person who was part of that preparation of presentation. So we are still examining this case as of now. But my point of bringing this case to the table is that if you are doing this practice, please ensure that all the names are entered in the SDT database. And please keep a check that whether these entities are really doing their job or there is something else to it. If there is something else to it, I would suggest that this kind of activity can be developed in-house. I'm sure the companies are good in terms of manpower talent, and they have good number of people with them. They have communications department, they have consulting people around them. So that can be a point for which the compliance people can take care of. So that's something from the PIT part. Then second point is about front running cases. Now the canvas of front running is on a little higher side as compared to PIT, because in PIT you have only one person who is buying and selling. There will be one person who is communicating, etc., etc. I'm not getting into the designated persons part. But in case of front running, you may have multiple people doing front running to each other. If we see a typical front running case, it will be one person who is having information about the impending order. There will be a person who get that information from that person and trade it before that person, that is big client, traded in the market. It will be primarily of two patterns, BBS and SSB. But I had seen a case which is in public domain wherein the front running does not stop at level 1. It has gone to level 3. I mean to say that there is one big client whose trades were front run by its own dealer, the person who is trading or rather punching on behalf of that big client. The dealer was doing front running in his wife's account, in his relative's account, right? The relative's account was maintained with another broker. So when the dealer was placing order in his relative's account, there must be some other broking entity who was receiving and executing those orders. So when that person was receiving those orders, the second person, the second broker's dealer, he started doing front running to those trades in his relative's account. The story does not end here. There is third layer. The person who is doing trades for that second person's relative, he started communicating to his brother and one of his relatives that you do the front running. So that's how the 3-layer front running has happened. And that case was examined. It is an enforcement stage as of now, but interim order was there, and that interim order is in public domain. So it's a clear case that front running is not limited to one level. It can be multiple levels. I had seen cases wherein front running is not limited to just one front runner. It could be multiple front runners. It is a case wherein big clients are not just one big client. There are multiple big clients whom the entity is front running. Now here, the point of mentioning all these examples is that if you are part of an intermediary and you are taking care of the compliances, please see to it how the trading or the dealing room is functioning. You need to put checks and balances. You need to ensure that all the codes, all the restrictions are being followed. Because I've seen that a number of cases, there are challenges in the dealing rooms itself, from where the information is being misused and people are taking advantage of it. So as a professional, I expect the people who are responsible for managing compliances or monitoring compliances or ensuring compliances should develop standards, should develop checks and balances, that people who are part of the dealing team or executing team, they really need to be monitored continuously. And in case if some red flags are there, it's better to start in advance rather than wait for some regulatory action. So that's on the front running part. There are examples I can quote a number of examples, but I thought this particular example is important because it is giving a bigger picture. And completing front running is again a challenging task, because you really need to ensure that the person was privy to the information about the big client order and he has taken advantage. So you have to prove that communication of information from the big client to the front runner through multiple means, and execution of orders as well, because trading pattern has to substantiate your allegations. So that's on the front running part. Now, the most important, the biggest canvas we have as far as investigation is concerned, that is FUTP. I remember those days when I was AGM and I was part of investigation team. That time, FUTP regulations were talking about small market manipulation, that somebody is buying and selling and creating artificial volumes. There were cases where companies were coming out with some announcement. Yes, my company is getting some 1,000 crore contract from the US-based company, and we are having these much of vision plans. But ultimately, all those announcements were fake. There was some price impact. The people who want to dump the share, they can go and take advantage of the price rise or the price impact. Things have changed over a period of time. Nowadays, technology has chipped in. People are taking advantage of social media platforms, be it in terms of Telegram or Instagram or YouTube's, where you will find a number of videos which are flourishing and advocating companies' unsound fundamentals. You will see that there are videos which are being perpetrated by unscrupulous people at a consideration, and they are talking, they are interacting either directly with the promoters of the company, or in case there is an intermediary involved, the intermediary is there. So a typical pump and dump case, how it works? A typical pump and dump case will have two dimensions. One, the company wants to have some movement in the script or in the price of the script for some objective. It could be anything. So for that purpose, the company will reach out to the people who can help them out. These people help in the form of either artificial buying and selling, that is buying and selling among these entities, their set of entities whom they had hired at a cost. Then after the price rise is there, you will find the investors who were not there earlier. So for example, I'll talk about a company whose number of shareholders at the end of December 22 quarter was 500. you will find suddenly the number of retail investors had gone from, for March 2023, 500 to 5,000. So what was so good about this company, that number of retail investors come in? Definitely there is something which is being shown in the public domain that is attracting those retail investors. Now that what is that magnet? What is that carrot? What is that attraction? That attraction is the dissemination of false and misleading information. And what these guys are doing, they are reaching out, they're disseminating or flooding YouTube's videos, and all sort of what do you call it, misleading information is being disseminated through YouTube videos. Like for example, I was dealing with one case few days back, and in that case the video was saying that Tata Group was investing in this company. Now the deal is almost finalized, and this stock, which is 20 rupees as of now, it will become 200 in 1 month, and in next 3 months it will become 2000. So how people can be trapped for such stocks is clearly visible from that video. Now once the video is there, the people have already impacted the price, investors have come in. The impact of video after this kind of price rise will be enormous. So what was 500 to 5,000, it could be 5,000 to 50,000 in next quarter, because people had seen that yes, there is a price rise and there is a news coming. So it's like adding fuel to the fire. And then these people who have taken positions before the uploading of videos, they will simply dump and the price will fall. And those retail investors who had entered in the market at the wrong time, they remain stuck in that particular state. In few cases, what we had seen is that promoters are also involved. We had seen that promoters had tried to get exit before. Promoters had tried to get exit either before these YouTube videos are uploaded, so that they are not under the net, because the statement would be that we had not taken advantage of that YouTube videos. But there are clear indications that they were part of the whole scheme right from the beginning. So it's very important that the entire canvas has to be looked into. Any PFUTP case will not run for few weeks. It will run for months. At times, it can go for a year or more than a year. And imagine the kind of resources deployed for investigating a case. You are starting right from the one single person who has started trading in the market, who has done banking transactions, who was involved in uploading YouTube videos, who was involved in funding those YouTube videos. In fact, just to share, in one of the cases, I had seen that a company who was involved in this kind of price manipulation, they were basically they had hired one of the operator, the middleman has hired this person for uploading YouTube videos, and the company has purchased a car, a luxury car. That luxury car was in the name of the company, but when the delivery was taken by the operator. And when we took the information from the agency, it was clearly written that who has taken the delivery. So that kind of manipulation is happening. So my point of advice to my fellow professionals with the companies is that please ensure that in case if there is a misleading information announcement which is coming, please disseminate the right information to the public at large. Why I'm saying this, in one of the cases which we have examined is there was a price rise, there was an artificial announcement or information about some misleading point. What happened in that case is the company has not given clarification immediately. The company has waited for the promoter to offload. After the offloading of promoters, the company came out with the announcement. Yes, the announcement was misleading. So my submission or my point of advice to my fellow professionals who are working in the industry is that in case if there is a misleading information being disseminated about your company, please ensure that right information is available to your investors at the right time. So with this, I would say only two things. That one, when you are holding the position of responsibility, be responsible. Ensure that you are always following the right side of the law. Don't go for shortcuts. Don't go for small means. That may not help you. Second, in case if you have any queries, if you have any problems, if you have any doubts, please reach out to people. There are people who are ready to guide you, who are ready to help you. You can reach out to your fellow professionals. You can explore this kind of platforms. And if not, as I said, informal guidance is an option which can always be explored. So I feel that yes, compliance status can, compliance levels, compliance standards can be improved together in case if we have the resolve to improve them. So with this, I would like to conclude. And in case if there are questions, I'm happy to answer. So once again, thank you very much.
Thank you very much, Naveen, for giving very detailed things and insight of what has happened. People are taking very lightly. Like I told you, that people think nobody is watching. So they do. The example of the trading, insider trading, that is real example. People think that if I'm trading on my friend's behalf, or if I am getting some tip and I'm buying, nobody is watching me, or if they are creating layer 1, layer 2, layer 3, they think even if somebody is watching, I have created this type of structure, nobody will see. But people are forgetting now. I remember one of the SEBI's case, Mohan sir, where the one person told that I have no relationship, and they proved that no relationship. Then suddenly there was a some of your officer who has got the picture of the social media where they were traveling abroad and they were together. And it has come into the order, your SEBI orders also. And the way SEBI is doing now, the web of relationship, not only just direct relationship, but through various channels, social media, this channel, that channel, their relationship. And I remember one of the case which we have discussed in the last program, last to last program, where they have done trading and they have no relationship. But later on, they came to know that they have studied together in the college. Like I just now gave you example of my friend Amit Mohan. He has become a director of FEIU. He has studied me. Suppose I say no relationship, but now if you see, go into detail, you will find that this is the relationship. Thank you very much, Naveen, for giving the insight. And the purpose of this program is that all these people, though they think that nobody is watching. The purpose of the program is that we tell them that SEBI is watching, the people are watching. And sometime in the next time, sometime if time permits, the people think that if I'm doing trading and I'm meeting somebody, I have switched off my phone, but I have switched off phone after reaching to his house, and I'm showing that I have not met him since so many things. And then you are getting the tower link, and they are finding that both were at the same place. So you can also take action. So all these things, sometimes it is a secretly you are doing, it is right, but sometimes to prevent this, it is also essential. People should realize maybe they may do some other activity, but that they have to put more efforts, more things. So thank you very much. Thank you for giving this. Now, Ravi, you are practicing. Yeah.
Pawan, I just want to have a small word.
Yeah.
Because you said about one of your suggestions, you said about 3 levels of enforcement where you should have some easy thing or even medium or even harsh. See, that is where we do have that one. Assuming if somebody has made some code of conduct violation, if he has done about 5,000 rupees profit or so. So we don't initiate action against them, but we issue a warning of that one. That is what I want to say, that is easy, and then medium is that where you don't have, it is not so grievous, but it has done some illegal gains and profits. Then in such case, we generally go for adjudication. In case if it is very much serious, then we will also go for 11B proceedings as well as disgorgement and imposing penalty. So that is where what you can say that the graded approach is already there, and that is what I would like to mention about it.
Absolutely right, sir. Sir, my only suggestion is, like in MCA, they have given online system of mediation and this settlement of SEBI has a very good consent settlement route. If we can make it online system, like I have violated, I'll go there, I'll put money, I will mention this penalty amount will come, I'll pay and matter ends. Otherwise, what is happening in your system, you have to go through the entire natural justice process, which is taking away your time and efforts. And some of the scrupulous people, they fight for 200 rupees also. They fight for 5,000 rupees also. It is taking away time of SEBI to focus. That is my only thing.
No, that I truly appreciate.
Yeah.
Okay, thank you.
Thank you, sir. Ravi, you are doing practice in this area. Now, Naveen is the other side and you are representing them. What are the message you want to give and why people are doing this? And what are the points of view where the regulator and the practitioner can understand and suggest things? So something new dimension, if you can give, it will be welcome.
Thank you so much, sir. Although I must start with a caveat that both the expanse of what has been discussed before I started to speak and the depth of it does not leave me with a lot of material to speak upon, as a lot of it has already been spoken by either Naveen sir or Ram Mohan sir or yourself in the plenary session. But I would like to start with one report of an economist that he had written long back. I think it is of 70s, but it still holds relevance, more so in securities market. He wrote a paper called Market for Lemons, in which he assumed that there is a market of second-hand cars, and there are both good second-hand cars and bad second-hand cars. Dealers of those second-hand cars are obviously motivated by the fact that, and the factor is greed, that if I sell a bad second-hand car with lucrative advertising and branding, it might save me more money. So they do it. Users and purchasers, on the other hand, have got less knowledge about which second-hand car is actually good, because every car is being represented as good. So in that deception, users cannot bifurcate between which is a second-hand good car and which is a second-hand bad car. So what happens? And this psychologist or economist, this gentleman said that this is how the perception is created. And this perception was, in this example, that all second-hand cars are bad. So he calls these bad second-hand cars as lemons and good second-hand cars as cherries. He says the perception is that everybody who's coming to buy these second-hand cars is thinking that he's going to buy lemons and he's not going to pay the price for cherries. What ultimately results is that it causes inefficiency of perception and adverse selection in the market. That's why you see the price discovery is not efficient. Investors lose confidence because they feel in a market full of lemons where bad companies are lying always, investors cannot believe even in good companies. And that's the macro level threat. That's the macro level challenge that we face or the regulator is fraught with in today's market. Just to remind ourselves, this regulator is different in its own way because they have got two-pronged objectives. One is to ensure the growth of the market and then to ensure protection of everybody in the market. So that's a big responsibility to shoulder. And that's where the job becomes complicated. I think to your pointed question regarding why people are doing this is, number one, it can all be boiled down and sieved down to the fact of greed. That's I think at the bedrock of entire thing. Secondly, is that people, and I say this with client attorney privilege, people usually have tendency to feel more intelligent if they crack new ways to outsmart the system. They feel fraud is not fraud, it's an arbitrage. It's an opportunity that I created. Others can't see what I can see. And therefore, I will go on and take the, in other words, they feel it is an enterprising attempt to outsmart others. That's number one. But not all of them are hardened criminals. In securities market, you would not find hardened criminals doing these activities. These are usually smart people whose intelligence turns against the market. Rather than supporting the market, it turns against the market and investors, and they are pickpocketing. To really ridicule them, I'm purposely using this word. They are pickpocketing the investors, and with great sense of pride. Unfortunately, that's where they have sloped down on the ethical path. But the quality of governance has also got a big role to play in this. When I speak of governance, this is also at macro level and at the company level also. Ultimately, it's a market of our society, and the broader reflection, the macro reflection of our societal standards would also reflect in this market. It can't be really different from our larger society or societal norms or standards. So governance has got a role to play in it. Then, although now situation has improved and is improved by a large measure with advent of technology and the kind of probity with which regulator is acting. In past, there were some instances that the frauds were caught long after they were done, implemented, and then regulator was found in a situation where they were reopening the graves. And one would be surprised to know that regulators were prevented from doing so based on the principles of laches and inordinate delay, which is itself a very contentious topic where there should be, in cases where there is a market-wide fraud or interference with the integrity of system, should there be any application of the inordinate delay concept or not? Because otherwise SEBI Act does not provide for any limitation inherently. The power is there, and the cardinal principle of law is that once something is unearthed, from that point the limitation is ought to run, and the assumption is not that since the day one everyone is ought to be aware of everything what was happening or what was transpiring. Another challenge, and probably the most peculiar challenge that SEBI faces, is in the investigations it conducts. I'll start with an example and then come to the point that I wish to make. There was a case of alleged insider trading. Although SEBI succeeded in that case by large measure, but I'm picking out one aspect that is particularly interesting to note. Two friends had got some connection between themselves. They studied together in college. They used to play cricket together. And then there comes the charge of insider trading. In some company, there was series of activities which was classified as insider trading by SEBI. Detailed investigation was being done, and in fact, pending detailed investigation, SEBI thought it fit to pass an ex parte interim order, and that was passed. These two fellows were connected because moments before the trading happened, there was a call between these two fellows. So one was a Muslim guy out of these two friends, and the other was a Hindu. There is no religious angle in it. I'm just telling these facts so that the story enters into mind directly. Later on, when it was looked upon closely, what was found that it was Eid day, and this friend had called his Muslim friend to wish him Eid, but his phone was switched off. So it was a missed call alert, not a message. And this was the point on which exoneration came in that matter. Although the larger web of insider trading was unearthed, but in that web, these two fellows were also under the radar of suspicion, but they were ultimately let go by SEBI because of these facts being brought to SEBI's notice later on. This highlights two things. One is that you tighten the noose of investigation because this really proceeds on the preponderance of probabilities. There are no clinching evidences as you would get in normal criminal jurisprudence or in case of normal crimes. this proceeds on set of assumptions, hypotheses, which of course has to be rooted in the facts of a case. Not, it can't be weaved in thin air. But the danger is that if you tighten the noose, even innocents will get into the grip of investigation. And if you lose it a bit, the real people will escape. So that's the problem. It has to be a really intricate balance between, not tightening it a lot and not leaving it loose. But in this entire saga of investigating for over decades now, SEBI has built up some robust system of investigation. They've got what you say, the knowledge repository or experience repository. In what in certain sort of cases, what is the probable next step the offenders take? How do they coordinate amongst each other? And nowadays cases are coming in which WhatsApp chats, telephonic conversations, not only calls, because when SEBI used to rely on calls, a usual defense was, what does this prove? Does this prove that I was talking about this particular matter or not? So I think SEBI has preferred WhatsApp chats, communication in form of evidence. And in one of the recent cases, I was shocked to find that the web of coordination ran so deep that people had list of scripts in which people were trading days prior to the trading was done, or if actually orders were put in the system. Well, one can have views about it, but this certainly tells about the forensic nature of investigation, the surgical nature of investigation that SEBI has undertaken. And certainly now people who used to think that, if I would commit a crime in the securities market, the odds of being caught is less. And even if I get caught, because there would be no clinching evidence, I would take my chances and, mitigate it by 10 other factors that I have. And by that time, I will have made my money and, made an impact and gone back with my bags packed. I think things are changing now, and things have been changing in the last decade when I really took up practicing in this field. Things are starting to change, and the sand started to shift. But I feel that we are still in a territory, or for lack of better words, I would still call it that SEBI and the market is at inflection point from the enforcement point of view. What we have achieved is laudatory, certainly, but is not something that should satisfy or should make us complacent. There is a long way to go. The kind of modern day technologies that we have, the kind of questionnaires with which SEBI engages with suspects, the kind of watertight compartment that questions make, all of that needs to be probably re-engineered in view of the technological advancement and the experiential advancement that SEBI has. And another important thing is that investigation should be done with purpose of finding the facts, not with the purpose of fastening the guilt. That is also an old age concept of jurisprudence regarding investigation. It's a fact-finding exercise. And even the investigation is required to be proved. It's not gospel. It cannot be taken as gospel. It cannot be taken as evidence. Evidentiary requirement is separate from investigation. It's an opinion based on, or I would say it's an analysis, which renders some conclusions based on the facts that has been gathered. Now, these facts could be animate, and these could be facts that are inanimate, or the logical conclusion or logical assumption that can be taken from the facts that are gathered or collected. I also fondly recall one paper written by a senior attorney of Securities Exchange Commission, Hilton L. Foster. He has written a very detailed paper on insider trading investigation. The paper, it's a 18-paged document. I got hold of this, I think 6-7 years back, and it had been a guiding compass for me wherever I've got an opportunity to prepare something or either to defend or to advise. And that really tells you about the anatomy of a insider trading investigation. So I think more and more work like the Hilton Foster's work, delineating each and every step into the investigative exercises, making robust SOPs and granular, not only high level SOPs, granular SOPs, because where people, SEBI has the might of system, SEBI has might of people, human resources, but I think where it really makes the difference is not everybody applies their mind in the same way for a particular problem. So there the standardization can only come with the granular level work. And I think that would further the crusade of SEBI in catching hold the fraudsters while they are in tracks, and will damage the fraudsters campaign against the market, and will safeguard the market against unnecessary harassment that they mete out. On the concluding part, I would say that the standard of evidence in securities market, which is preponderance of probabilities, I feel is also at an inflection point where this is going to be developed, because this is really a murky water sort of a concept. You can't really define it, and no mathematical precision is required for this. The test really is, which I think the English lords have given and is followed until now, is that this is more likely than not. That this thing has happened is a case more likely than not. That's really the test what has to be applied by judges. And it is ultimately to be guided by the trained intuitions of judges, trained intuitions of the officer who's investigating, and trained intuitions of the officer who's going to decide, adjudicate it finally. So I think because there are cases on this aspect pending before Supreme Court, also on the point of exercising parallel jurisdictions, adjudication, 11B pursuant to Nirmal Kotecha and SK Chaudhary's case, all of that. So we are really at an inflection point, and maybe after a year when these cases are really decided, and I hope they are decided in a time-bound way, we would be able to, see a new landscape of jurisprudence evolving especially on the jurisdictional aspect, and how the evidentiary standards are to be applied in securities market scenarios, where especially when fraught with violation. So that's all from my side, sir.
Thank you very much, Ravi, for giving a different dimension of jurisprudence relating to securities market. Now, Naveen, I have received some questions which I would just want to ask. Naveen, what is happening? There are so many people are influencer now.
Right.
Like you go to YouTube, you go to Telegram, you go to anything, everywhere, wherever.
Social media platforms.
That is. Now, I have one suggestion and one query which is there. Then why SEBI is not putting restriction on this? So there is a possibility that SEBI may be thinking that how we can register them or how to make them. So my suggestion is, the question which people are saying, why SEBI is not doing? Why can't you do this? That anybody who is giving advice to the market, he should be registered with SEBI, and he should give his number on the site. Other than this, any other person is giving the message, any deal, any transaction, any information, the SEBI will take action against them. Now, you cannot tell everyone to register and they will not register, but you can make this reverse engineering and you can tell this particular thing. What is your view on this?
So my take on this is that I had dealt with investment advisors in my previous department. So I know what kind of responsibility this particular registered entity owes to the investing public. As far as this investment advisors are concerned, as you know that they are registered with SEBI, granted SEBI registration certificate. They are supposed to follow the compliances which are stipulated in the SEBI IA regulations 2013. If there are people who are giving advice, investment advice in terms of those regulations, as investment advice is clearly defined, that includes financial planning as well.
Okay.
And the people who are exploring social media platforms, whether in terms of YouTube or Instagram or maybe Telegram or any other mechanism or any other platform, they are subject to a requirement of getting registration. If they are not getting registered, it's a non-compliance and they are acting as an unregistered investment advisor. If you go a few years back, you must have read in newspaper, there was a flurry or rather the flood of unregistered investment advisors in a particular city of India that is called Indore. People used to receive number of calls left, right, center, day in, day out, day, night, irrespective of time, and people were getting cheated out of those entities. SEBI has been very strict against those entities, and nowadays that kind of rampant calling has come down after SEBI make changes in its regulations. So my take on registering everybody, irrespective of analyzing their conduct or the activity, may not be the right approach. But yes, if somebody is not following the requirements specified in the IR regulations, yes, there is a case for it, and action has to be initiated against those entities. Sir, आप mute हैं.
Sorry. My only suggestion is
Sir.
that I suppose I want to manipulate market, so I have started giving. So there is no fear for me. I will suppose I will give, then I will go to another channel, then I will go to another channel. I will create some other thing. There are so many technological things now. I can change my face, or I can create my own new dummy entity, and I can do this. So the point is, if SEBI is saying that if anybody who is giving this advice, he should be registered with SEBI and whose registration number should be there. So as an investor, I'm going to the site, I'm seeing, okay, Ravi Prakash is giving this and it's not registered with SEBI. I will not have any confidence in this. That's all, nothing else. So by this way, you can, thousands people are giving, and sometimes I'm surprised. You will not believe, a person like me who is in the market since last 30, 40 years, I just, the way they are giving headings, anybody lived, 1 rupee share will be 100 rupees. Why are you waiting for this? All these things are there, which they are doing this. So what they are doing, they will advertise, people will buy, they must having share and they will sell it. That's a simple pump and dump story is there. By doing this, it can be helpful.
Okay.
You must consider this.
Okay.
Now, next is the behavioral science is very, very important. And that when we were students, we were studying and then we were thinking, oh, behavioral science, what does this mean? Why should do this? But I think the right time is there. The SEBI should also have the behavior, because I know people, they are doing manipulation in X place. SEBI has caught hold. Now they are starting with some other name, some other people, wife name, family name, friend's name, some other thing. But the most important, their behavior is same. Their pattern is same. Their style is same. Okay. So you can identify, okay, like in criminal jurisprudence and criminal cases, if you see the OTT channel or say the various site, you will find that they say, oh, this murder has taken place, and the same thing as used, same logic as used. So they identified this may be the same person. So this behavioral science, psychological process should also start in SEBI. That is another point which I want to tell. This is maybe SEBI must be thinking, but strongly think that how the behavioral science and psychologists can add in SEBI and they can add value. Ravi, you want to say something?
Point well noted. Point well noted. We are already cognizant of this, that behavioral science is a pattern which needs to be taken into account when you see a specific pattern, a specific style, or a specific modus operandi in a particular case. And then you can easily judge at who can be behind this show.
Yeah.
We do that.
Yeah.
When we come, as I said, when in the beginning of the session, that when we got case For examination, it is only a small or prima facie view. But from that prima facie view, we can visualize that who can be the people behind this. So
Okay.
that's being followed, and we will continue to follow that, sir.
Yeah. Ravi, do you want to say something?
Yes, I wanted to make a small point. People lie, patterns don't. And that's why your entire
Yes.
surveillance
Yes.
activity is developed on those patterns. I hope and believe that all the patterns that SEBI has experienced in this entire journey has been added to their surveillance systems. That look for this pattern, look for this pattern. The algos are made like that. Now, it is different matter that even after you catch hold the patterns, people may still lie, and sometimes they get lucky and go scot-free. But patterns, usually they don't lie.
Okay. Okay. And Naveen, one more thing also SEBI can do. Like I have done, like you came to know that some red channel is there, some fraud is taking place, or something wrong is happening. Now, in my opinion, if SEBI is just writing, there is a suspicion on some company. Like you mentioned that the trading increase, there were no multiple shareholders has become. I'm just saying if SEBI is sending one simple letter to them where you have a doubt, and then I think the person who is thinking nobody is seeing one letter of SEBI, either he has to change his face, change his style, some other way he will go, but he will do the same pattern. So if you are identifying that this company is having a 500 shareholders, suddenly it is becoming 10,000. So you can ask them. You can ask the person who is doing trading, or you can ask from company. Sometimes promoter and people are jointly hand and gloves together. They are doing. So things can take place. Last point.
Noted, sir.
Yeah. So SEBI can launch the fraud bounty program, booty program, like the fund they have. They can create. They can sell fintech, startup, cyber expert, even individual, even employee. They can tell us the fraud, and you have given the guideline that you should not write under this sun everything. You write a specific point, that is the guideline, then your complaint will be entertained, otherwise it will be dumped in this. So if you can make this on, it can come on your portal where you have a specific point and you are asking, and then it will be submitted when there's a logic in this through algo.
Yeah.
And if this information is correct, you will get money and you will do this. So suddenly you have 10,000 of 20,000 SEBI officials across this. And this I have seen in Delhi. Now Delhi, they have started a app where you just take the violator of traffic. You just take a photograph of that person, their number, and put it on the one side of the Delhi traffic, and they will challan, and they will share some money to you by doing this. So same type of thing, if I'm finding, say everybody is, so nobody is watching will become the everybody is watching you. Okay.
Noted, sir. Thank you. Thank you for your suggestions, sir.
Okay, so it's a time to close now. So as usual, we just talk about the topic and the program, 30 seconds or 1 minute. So Naveen, I will start with you.
Sure.
Your closing remark.
So my closing remark will be same what I concluded in the couple of minutes back, that I want each professional to remain active and vigilant when you follow the compliance part. And whenever you find challenges, please talk to people, please interact with people, please reach out to people. If required, you can reach out to SEBI as well to get your clarity in compliance part. If you do that, together we can make a better compliance ecosystem as far as Indian markets are concerned. So that's how I would conclude.
Thank you, Ravi.
I think I would put it in the way that, first of all, investors' vigilance is required, or investors' diligence, regulators' vigilance, and then whistleblowers' valor. These three things are something that we require in our markets.
Okay.
That's it, sir.
Okay. Okay. So my comment, if SEBI embraces this path of reactive to proactive, which is there, but we have to be more because the other side is very active and they search new because एवरेज है चोर सिपाही से ज्यादा होशियार होता है. हम बचपन में भी चोर सिपाही खेलते थे तो जो स्मार्ट लड़का होता था वो चोर बनता था, कभी सिपाही नहीं बनता था. So that logic is still there, and the fraud follower to a fraud preventer in global market, SEBI can become, and SEBI can do something great in this, which they are doing, but something more is required, and it is always dil mange more in every aspects, and here also let's together work on this, give new idea, and whatever we have discussed today, I will compile it and send it to you and SEBI and Mr. Mohan sir, that this is the some suggestion, some idea which you can use it. With this, we have to close this, and thank you, Mohan sir, thank you Naveen, thank you Ravi for giving very deep and strategic point of view and the legal part and their systematic approach of this particular aspects. With this, I want to close this, but before that, I want to announce 5th is a holiday because of the Eid, and the 12th September, our next webinar, that is 234 webinar on RBI's new co-lending direction 2025, implication for banks, NBFC and financial institution. Till then,